Good morning, everyone, and welcome to the Morning Edge. As I indicated yesterday, I'm going to be, Blake is out all this week, so I'll be covering the Morning Edge for him. He's out on vacation with his family at Disney, and so I'll be basically following the same format as far as breaks, so that we're pretty much all on the same page, and everybody expects the break times to come about the same time that Blake takes them, about the same extent. He usually takes about a 6 minute break every half hour, and that's how we'll do it, just to keep everybody in sync. Right now we've got the euro on its back foot. We talked about an area here over the last week, the 1088. We've actually gotten past the 1088. The actual bias pivot, I've gone over that multiple times before in the past on what was on the way up, and actually eventually retested it, which is at 1048, which is the bias pivot. And so we're a little bit extreme here, although I always tell people when you want to look at what the dollar's doing, or what the euro dollar's doing, keep a look at the dollar Swiss. Now, we've got some real good resistance to the dollar Swiss at 98.92, so we're actually 18 pips away. 1088 was a very good level here on the euro dollar. On the 2-hour chart, we've exceeded that a little bit, and just below that on the 15-minute, we've got 1074, and maybe that could try and push it to that level. We'll try to eke out a little bit of a bottom here. I think from a scalp long opportunity, it's a good area to come in from a scalp long opportunity if you're just trying to catch some scalps down here. I think the market's gotten a little bit extended. I think, like I said, I've been saying all along, stuck to my guns, even when we were making the highs. I think we will be at 107 by December in the euro. So I'm still sticking to those guns, 107 by December, even when we were pushing to the highs and we were at 113 and change. I was still saying, hey, look, I still think 107 by December. But I think we're a little bit overdone here. It's been quite a push. I mean, and it was pretty quiet yesterday. I mean, I was short over the weekend. We talked about that. And it's covered. But it's been a long, continuous drip. I just think that the drip has gotten a little bit too far at this point. So, although I think eventually we'll get lower, but I think we may have stretched it just a little bit. And we're seeing the dollar Swiss come off a little bit also. So we'll take a look, see what's going on, and take a look at the news. As I mentioned, I like to go in and cover the news to get, not so much from a fundamental perspective, but to get what the tone of the market is, what they're looking at over the course of the day, or could be the next couple of days. What's kind of moving, driving the market right now? What is the theme or the tone of the market? That kind of helps me. Like I said, because I don't hold trades, like I said, for days and days. Man, I held some short euro over the weekend. But for the most part, generally I just hold trades 1, maybe 2 days. I mean, for me, 3 days is almost like an eternity. And sometimes I will hold a trade that long, but I wouldn't say it's rare, but it doesn't happen very often. So most of just like I was telling some of the guys here in the chat room, I said, as the euro was making new lows, I'm like, this is a scalp long opportunity, and I see a lot of people puking, and I did tell them, I go, hey, look, the dollar Swiss, the next key area is 98.92, but I think, like I said, we've kind of pushed the market a little bit further, even further than what I would think. So I'm long just from, once again, a quote-unquote scalp long opportunity. We'll probably rally up, then we'll pull back, we'll gather a little bit more, then we'll rally up a little bit further. Pretty much the way that I'll play it, once again, like I said, from a scalp long opportunity. We're going to get into the news. And while we're talking, we've seen the cable just continue to get bludgeoned. We've taken out 122.50, and take a look at something real quick. Our support, remember, it was 122.26. Now I'm saying we have a support level. That wasn't, I think, on the bias chart we're looking at. What I'm saying is we have a support level that I pointed out which is a 22.26. We're not that far away from it. Probably a little bit, once again, a little bit overextended here in the cable. Heard someone asking, when will the pound stop dropping? That's just about the time that the bottom is put in. So, and I don't mean a bottom, but you know, like a little short-term bottom, kind of like what we're probably going to see a little bit here in the euro. So let's go and take a look here on regarding the pound. Sterling stood black below 123 on Tuesday as Brexit concerns weighed heavily in the market, still in shock after Friday's 10% flash crash. After a steady 24 hours, the pound slid 0.6% to 22.78 in early trade in London. It's also 0.5% weaker at 90.51 pence per the euro. Past 4 days are now the pound's worst against the dollar since the aftermath of the vote to leave the European Union in June. There's nothing to go on the data front today, but concerns surrounding our ever-increasing current account deficit had reignited discussion around the widespread impact such a hold can create, says Tobias Davis, head of corporate treasury sales at Western Union. Once again, like I said, when you get in a negative, I wouldn't say a negative spin, but when you get into a negative void, then everything that's negative, or should I guess probably say like a downward void, everything that's negative gets accentuated, and that's basically how the market ends up playing. That's what I'm saying is so it's just like you know, like in a bull market when sometimes in the past years your stocks were going up. Bad news is just be quickly get dismissed and the market just reasserts itself. Well, obviously right now in the cable it's in a very down mode, so any kind of good news, I'm not saying there is good news, but there has been good news as far as economic activity, very, very good news, but that gets pushed to the wayside, and then anything that's negative gets accentuated. That's just the way the market works, because people are, their ears are in tune for that. You know, they're thinking, the market, the price is already going down, so anything that plays into that is going to be accentuated. So essentially that's how that's playing out, but and obviously that's been the concern because, as I said, you know, they've got a big, huge current account deficit that could potentially balloon, and prices are just, you know, being pushed down even further and further. Liquidity is also concerned at present, highlighted by gaps in price action. As I was saying yesterday, people asked me about trading, and I'm like, oh, I don't know about that thing. You know, it's just, the concern is if you get on the wrong side, you know, the problem is I'll give you an example here. I got on the euro in a scalp, and it was dipping. I'm like, well, you know, the next level is 10.74. I think we're, you know, quite overdone in here. I mean, at least I can see something. You know, I can see, well, where's the next level? Where is it? Where can it go and hold? Is the market a little bit overdone? But you get in a situation where the way cable is, it's like even if you get down a little bit, you're like, wow, maybe it isn't even going to come back. And you ultimately end up bailing out, and then the market starts to, you know, work a little bit higher. And I just think that we're kind of in that negative void right now with the pound, and I just wouldn't trade it because, I mean, if I had to trade it gun to head, obviously I'd be trading for the short side. I just don't trust that market. Is it that all of a sudden out of nowhere the bottom falls out? But anyway, it goes on to say here, they wonder if Britain can continue to draw in the large net flows of capital it needs to fund its current account gap, equivalent to 6% of gross domestic product if the economy suffers a downturn and firms relocate to Europe. If it can't, the pound may need to fall much further to slow imports and boost the competitiveness of exporters. Worried by the outlook for capital flows, Deutsche Bank strategist George Sarvelos has been predicting sterling to fall to 115 since late last year, and he said the pound might now get there faster. If you look at yesterday or the day before, it can go down very quickly now, he said. The best of our forecasts was very bad flow picture in the UK, even without Brexit. So, this is so hilarious. Remember I told y'all just last week, the Fed's never going to raise. The Fed don't raise. They have zero credibility. Nobody believes the Fed. And now look, everybody's flipped the other way around. Now everybody says the Fed's going to raise. And that's why I say you can't listen to these idiots half the time. I'm talking about the prognosticators, all these people that don't know a damn thing. So since the dollar hit an 11-week high against a basket of major currencies on Tuesday, as investors increase their bets on the U.S. Federal Reserve raising interest rates before the end of the year. Of course they're going to raise interest rates. Kiwi dollar was the biggest loser against the greenback, shedding as much as 1% to 70.61. We talked about that head and shoulders. Its weakest since late July after an official from the country's central bank reiterated that further rate cuts would be needed to jumpstart inflation. In contrast, traders have priced in a 70% chance the Fed will hike rates at its December 13-14 meeting, up from 66%. Investors looking at Wednesday's release of the latest Federal Reserve Open Market Committee meeting to see how close the Fed was to hiking rates last month. Speaking to reporters in Sydney, Chicago Fed Evans said on Tuesday that he could be fine with the Fed raising rates in December, but he wanted to see how the economy and inflation progressed before deciding. Some analysts said the growing doubts over Donald Trump's ability to win the U.S. presidency were also helping to drive up the dollar, after the most senior Republican in Congress, Paul Ryan, distanced himself from him. But not all agreed. I think politics is difficult for the dollar these days. I don't know if the market has quite made up its mind about what to make of a possible Trump victory, as said DZ Bank strategist Sonia Martin from Frankfurt. But not all agreed, and I think the dollar strength is more to do with it has to do with the Fed. At this point, it seems likely they're more willing to take a slightly more hawkish stance. Let's see. So we're going to take a look at what's coming up today as far as data. And nothing, for us. So we don't have anything going on until tomorrow. And tomorrow we'll have German wholesale prices, France inflation report, Eurozone industrial production, coming into the U.S. Just nothing. So we're going to move into the charts. And when we take a look at the euro, this is an area that I was pointing out for support here. Which is right here in the 1088. And just below we have the 1071. So really it's this area here that as I find is a little support zone. You see between 1088 and 1071. And we're pretty stretched in here. 1084 is actually the 88% of this move, from 46 all the way up here to 1367. And I just think that we're a little bit stretched here in the euro. I think this is a very good area here. I think, like I said, I think we're still going to go lower. We're obviously starting to look like we're breaking out of this range here in the euro and working lower. And just a moment. So when we look at support here in the euro, obviously on I've got this marked off in the red. Our bigger objective, this is where I would expect a pretty good solid bounce off of this area, is going to be our bias pivot at 1043. This is where they broke out back on the FOMC. And what I was telling people, hey, look, if it gets above 1043 on a 2 hour, actually at the time we were looking at the 30-minute chart. I said, we got above 1048, 1043 is the true bias pivot. I said, they're going to go in and really, take off and move higher, which is exactly what they did. They got all the way up here to 1236-ish, which this was at the time to 61%, before the market pulled all the way back down here to test back, and this was 1046 here. Now, I guess if you were looking even further back, so we've made it back here to about the 61% of the entire move here, right that we're at, which comes in at, looks like that's 1086. So we're pretty stretched of the entire move here from the low of 912 to the retracement high of 1368, move 67. This pulls us back here to where we're at right now. And at this point, I think, like I said, obviously, to me, it looks obviously we're starting to break out of this range here that we've been in for 2 months. But we're a little bit stretched in here. Doesn't mean that maybe if at the end of the day we could make it down here to the 1043. And I guess that's what we're on the bias chart. That's what we'll list as our true support here is going to be 1043. And resistance is going to go and come in we'll call it 1115 for right now. It's a little bit closer, it'd be like 1125. But we've come a ways, and like I said, if you look at the bigger picture of the range, I think it's a couple of ways you can look at it. For one thing, we've been discussing this for about the last couple of months. This entire range, except for a couple of jumps in here, we've been basically trading in this range here. With the exception of this little pop here and a dip here, basically been trading right here in this range. So I think we're breaking out of that range, although we've gotten a bit extended here. When you look at the lows from 912 to 1368. Now, takes us to, I always tell people, if you don't want to know what the euro dollar is doing, you take a look at the dollar Swiss. Now, the dollar Swiss obviously is, we talked about this yesterday, this bias pivot here, 98.44. And you saw it struggling initially yesterday at that bias pivot. Now, we've since engaged and gotten past that bias pivot. And the key area is going to be this zonal top right here. You see all the touches? That's 98.92. Now right now we're 13 pips away, and you see the euro on its lows right now at 75, 74, 75 right now. So this is, this is where I expect the dollar Swiss to get a little bit of a pushback against this area. So when you're looking, I always tell people, if you want to know what the euro is going to do, keep a look at the dollar Swiss. The dollar Swiss will give you, at least from, as for me, when I look at it on a short-term trading standpoint, I'll take a look at where the dollar Swiss, what levels has it got above it or below it that it can go in and push to. Because, as I said, for me, as a very short-term day trader, I'm just looking at the levels and where it pops to. And if it gets beyond this level, like we did 98.44, where do we go to? And so right now, it's all about, right, at least for me, 98.92. That's where I think you'll see some pushback. We do have a level right here. We'll take a look at this real quick. Right there, you see that? And we'll mark that off. $99.12. But for me today, just like yesterday when I told you about 98.44 being the bias pivot here, see the struggles we were having up here? Once we got it, there was blue skies ahead. Well, today, even though it's only 14 pips away, to me it's all about 98.92. So we'll mark that off as resistance. And support would have to be the old bias pivot, 98.44. This is now support, which was resistance before. In general, I'll take a look at it here on a 15-minute chart. Like I said, since I use it so closely with trading the euro on a day trade standpoint. So I'll look at the levels, and of course it's not the 98.44 here, but you can see here with this 98.63, there's a very minute pushback here. You see that? We've reasserted ourselves, but as indicated, it's actually been on a buy mode since yesterday. But as I said before, this 98.92, that's where I expect to see some pushback. And this is this nice little zone area here that I'm looking at, where I think is if you're, the key thing is you have to look at it in two different ways, on a shorter term and a little bit longer term basis. Is, as I indicated before, is the key thing to look at from a bigger perspective is it appears we're now clearly breaking out of this range here. And that's what I'm saying is I think it's an opportunity, a scalp opportunity, because maybe the market gets a little bit overdone, but let's be clear is that overall, I think we're seeing the first signs now the market can break lower, because the whole thing is, as the market tries to rally back up here, okay, and if you're looking at it from a snapback rally, we're talking about 11.25. But on a snapback rally, and that's going to, anything back, if you think about it on a bigger perspective, supposedly, against this 11.51, I don't even see that it could even make it back here. But any moves back up here are going to be faded. People are going to be taking positions because they believe now we've broken out of this range. So once again, I think there's some scalp opportunities, but make no bones about it, is that it would appear that the market is breaking out of this range, and that's where we're going to be heading. The next key area, now 1088, I think is a very good area, and we've got this little zone in here between 71 and 88. Some very good volume and trading right in here. So you probably see, once again, those people that may be short on and are looking at it on a very shorter term basis, may be looking to go in and get out of it, the shorts that they've had. And then you see the market come back up. But I think that any moves back up here towards 11:25 are going to be faded. People be looking to go in and take the other side of that trade, thinking, hey, you know what? It looks like we're going to be breaking out and we're going to be going down over the next few weeks. We're just a little bit overextended here at this point. We go back here in the euro, and you can see a little, the euro, the Swissy, the dollar Swiss is seeing a little bit of trouble. Here's the dollar Swiss on the 15-minute chart. Here it is on the 2-hour chart. And there's that area we're talking about, the 98.92. It's 14 pips away from that area, but you can see the zonal top here. We're seeing a little bit of struggling here on the 15-minute. We're right here in the euro, right here into this zone between 88 and 71. Well, as I said, I'm going to stick to the way the time zones that Blake usually uses to go in and go on break. So we're going to go in and take our break, keep it about the same that he does, which is usually about 5-7 minutes. And so we'll be back, and obviously we'll cover the other pairs, we'll cover bonds, we'll cover gold and the rest of the other pairs. And thanks for joining us here on the Morning Edge. As I mentioned, Blake is on vacation, so I'll be covering for Blake throughout the rest of the week.